Welcome to Trading Lounge and the Australian report for the 23rd of June. I'm having a bit of difficulty with the videos this morning. They're not uploading to Vimeo, so I've just uploaded the last one to Facebook. It has put me behind a little bit, so apologies about that. I want to start with the ASX on the bearish move here first. So as you may know, the move up from March here as an A and a B wave triangle here, and then 1 and 2 and 3 and 4 and 5 there. Not sure where number 3 went, but let's just replace that. 1, 2, 3, and then down for 1 here. And as with the S&P 500, the Australian dollar, and most other indices, we're looking at this current move in the market. So we're just trying to figure out if we've got an A wave here, an A and a B and a C wave here for the B wave, and then 5 waves up here to the 78.6% retracement level here, and we'll be looking at 5 waves in this particular sequence here. We have wave 1 and 2 in place already, so we'll have wave 3, 4 and 5 to play out here. So it's roughly around 6,100. So that's certainly possible that this whole bear market situation can occur, but we're more on the bullish side, as you may know, so we'll go to the bullish side, but we just got to keep that in the back of our minds there a little bit. So the bullish pattern is a little bit like the Australian dollar here, where we have wave 1 and 2 here, 1 and 2 and 3 and 4 here. Now having wave 4 here is a bit of a problem, because it does appear that the move down here is 5 waves. I can get 3 waves out of it, so it is possible for the market to go here and then just go straight up from this point up into this space here. So that wouldn't surprise me at all, and we will play for that as well, and we'll understand that. But the other point here is that the market can just move up to the 6100 area there somewhere, and then fade from that and come back and have wave 4 here, and then move up from that point. In the US, that would be wave 1 here with an A and a B and a C for wave 2 here. So there's a couple of things that we need to work through, unfortunately. Let's go in and take a closer look. So this is the gist of it here, where we can have this as an A and a B and a C here for wave 4. I'm kind of happy with that actually, and wave 1 here and wave 2 here, and then moving up for wave 3 here. So any support on top of the 6,000, and we can go along from that point. How far we get is another question. We may just get to the 61 or above that there, the 70, from this high here roughly to the low there. The 78.6 here brings us very close to the 6,100, so we'll use that as a bit of a starting point there. So it can move to this level and then move down. All we need to do is that if this makes a new high above here and gets support on the 6,000, then we can go long, and we'll look for 5 waves to the upside in that case. Once we get to the 5 waves here, then we'll just have to reassess the situation at the 6,100 and use the classic trading levels pattern to move in on top of support. We need that as support as such. So a little bit like over here, the market came up here. It didn't really react from here in this case, but had a bit of a correction here, and then had that first high above the level there, and then had the second one and the third one. So we take this first one here to go along on the second one here, and then the third one here. So it would be something like that over here on the 100 here that we'll be able to figure out. So in a nutshell, we can move up to wave 3 and continue to move up higher through here. Second thing is that we have this as an A and a B and a C wave here to the B wave here that will come in around this level here, and then drop from that point. Now we can also expect a move. We can expect a reaction from the 6,100 anyway, so we don't want to make any decisions too quickly at that point. We need it to the pattern at this level to mature and then become support, and then we can move in from that level. We don't want to get this is a bigger version of it here, where we have the arrival, the reaction at 6,000, and we're looking for the first high above the level in a way, and then a pullback. So if we do get 5 waves up here, we'll look at those in a moment, then that would be wave 1, and then we'd have a ABC here back for wave 2, and then we'd move up from those points. So then we can also move in over here and on here for that as well. So our job is to track 5 waves up here, especially if we can get support on the 6,000. So we've got 2 scenarios that are unfolding, and at least things have matured a bit within this space here that we know what that is. So that's one thing. And this is, like I mentioned, this is going through with the Australian dollar and the S&P 500 and so on and so on. So it can be counted down here as 1, 2, 3, 4, 5. So we really need to take that on board there. And then the A wave, the B wave pulling back to 50, 60%. I know we had short trade in here and so on. But now we need to look at the long side. So any support above this level here, then we could be moving up from 6,000 to 6,100 area here, and we're looking for 5 waves to the upside here, so that should be our focus for the time being. And this is kind of like the same for CBA and BHP as well, which we'll take a closer look at in a moment. So just looking at this whole correction here for a moment as an A wave here, and then an A and a B and a C wave. I kind of like the B wave in a way because, you know, if it was, you know, if this was wave 1 here, normally we would get something really quite sharp here. So an A and a B and a C quite sharp in here, and taking about a quarter or a third of the time of what it did to produce wave 1 here. But this here has produced much more time than this one here. So it's likely that it is a correction here as a wave B. So that's what we'll be a little bit mindful of. Yeah. Also too, you know, when we're looking at an ABC correction here, so let's just consider that the A wave, the B wave here, and the C wave here. Normally in a ABC, the C wave will be on a bit more of an angle. So we'll watch this here, see what angle it is compared to this one over here. If it's lazier, like this such, then we know that it's corrective at that time. It's struggling to move up. If it moves up faster than this one here, then we'll know that it's more bullish and it'll be in a wave 3 situation. So in a nutshell here, we can count 1 and 2 and 3 and 4 and 5 here for 1. So because we've got an impulse wave here after a correction of an A and a B and a C wave here, that could be moved over to here. That can also be moved over to here. That could be moved. I'll just leave that because it's possible that that can just be an A wave, B wave, and C wave here, and then move up from there, or just move straight up. So we need to keep the stops under that level there. But because we got a clear 5 waves here, that means that we'll get another 5 waves over here. So we're looking up into this 6-1 space. That's our trade job for today. Just to go on the tick chart here and have a quick look. So just on the tick chart here, don't need to go too far back, but just to point out that we've got wave 1 here and 2 here, nice strong 3rd wave here, and the 4th, and then the 5th wave here, then the A wave, the B wave, and the C wave here for this, and then up for 1 and back for 2. Like I mentioned, this can be an A wave, a B wave, and drop back down here for a C wave, and then push up. So just be aware of that. But the good news is that because we got 5 here, that means we're going to get another 5 over here. So don't be intimidated by any short squeeze on the open, so to speak. Sorry, just checking. Sorry. So I think actually this is, I had this right here, I think. So this may not actually be done and dusted just yet. So we might need to be just looking at something else here. Do I have any little guys over here? No, just looking for some other labeling here. well, don't have it. Just sort of seen another count here where we obviously can have wave 1 here and 2 here, and all of this for 3 here and 4 here and 5 here. So what may occur here is that I can't draw on this side of the tick chart, but if I take it from this low here, we may just have 5 waves up into the 610 here, and then have an A and a B and a C wave back, and then a move up from that point. So the arrival, the reaction, the first high above the level, and then a corrective move here. So you know that particular picture as such, so we can just have a look at that like this here. So this arrival here, the reaction, the first high above the level, then this here, then that. So there may be just a little bit of a squeeze on this here. So the arrival, the reaction, the first high above the level to here, then the ABC pattern coming back and then up. So I think if we keep our stops out of the way, if we look at this here, just trying to accommodate everything, that's all. So that's the 61.8% here. So that means that we need to leave the stops out of the way. We need to be way down here for that. So if I come back to the 15-minute chart here for a moment, I'm going to take the sort of worst case scenario for this because it will just make life a little bit easier. So if we consider let's take that to 510, because that's number 1, that's the strongest thing there. Then that would leave this here, move this at this point here, the 61.8%, which would leave this here. I'm not saying this is the count, but it's a possibility that this can come here and do something like this and then move up. That's all. So I think it's good to go long here. What we'll do is we'll just move this over to here, so we'll capture that, and then we'll copy that and we'll put that there, and we'll also copy this again and put it over here, but we'll just put half a trade here, close that. We don't normally chase that above, but I want to chase that above there, so I'll just put it on top of that high there. So that will be half a position that you'll be able to accommodate a move back into that particular space there for that. And then what we want to do is we want to look at the levels here. We've got 10, 20, and 30. Now, and then we've got 50 after that, of course. So 5 here, and then we've got 8 up here. So, which is group 2 up here. So we also got 65 in here. So we'll just pop that in here. 65 and 72 in here. Close enough. So the idea with the levels is really to scale in onto the 1, 2, and 3 here. So just in here, we'll also put group 2, which is 72 in here. This will be the support for anything coming back in here. We need to build in on these over here for this. So we want to build on this level, and we want to build in on this level, and you can also build in on this level as well, and then just leave it at that. And then what we'll do here is copy that. We'll just put the stop out of the way here for the time being. So in a nutshell, it's really all about having that 6,000 as support. So visually you can see that it's resistance at the moment. So what you need to do is you need to see it as support. So you need to see it come above the level, come back and check it. The checking can take us lower, but we're not at support yet. So any trade that we put in here is at risk. So just be mindful of that. I want to have a look at, first of all, iron ore, because we've been watching that and we've seen it move down here a little bit. So that's going to put the pressure on on BHP. I'll just check the indicators. I think it's corrective because of the speed which the stochastic is moving down. So it may just come and get a bounce off the 700 and not pull all this way down through here. But certainly it needs to come down a little bit further from that. So certainly looking corrective. And if we had volume on this, if we had this as a futures contract, we'll be able to see the move down being on lower volume. So we'll just keep watching this. The BHP scenario has pulled back to its 38.2%. So we were looking at this, as you know, as 1 and 2 here, and then 1, 2, 3, 4, 5 here for the third wave here. We could also look at it as an A and a B and a C wave here as a corrective wave, and then move down from here. But what I want to point out here today is that we're sitting right on the 38.2% retracement level here. So we should see this push up now from this point. How far will it go? How complicated will wave 4 get? One thing that bothers me about the wave 4, I can see that it's an A and a B and a C wave here. So I know that that's good, but we could end up getting something like this here before we move up. That concerns me a little bit. And the reason I say this for is that this is actually really quite small compared to this A, B and C here for wave 2 here. So all of this time here to correct this trend, and then all of this big move here and having a small correction here, but it has pulled back to the 38.2% retracement level. So if you're thinking about buying it and holding it, well then that's the point. This is the place to do it at as such. The CBA as well, I'll just bring that across here on the hourly chart here just for a moment. So we're looking a bit hard to read this down here. This has been one of my problems, but it looked impulsive. So I thought that that the move up here, coming back up here, the 61.8% retracement, which is really banging its head against here at the moment, but it doesn't want to give up, does it? It wants to it really wants to push up through that now. So that will be 70. So it's kind of going to do the same thing the Australian market, the ASX, is going to do. So we're expecting the ASX to push up and then fold back down here, but with the possibility that it can move up further. So with this market here, if it was going to continue to the upside, then 72 is really important. If you know the trading levels, then we'll also see some sort of corrective pattern across here. We would need to see some highs here that we could go long on here. So you could possibly go long here, but it may only be for a short time. Otherwise we need to pick it up over here if this is going to continue to the upside at that point. So yeah, it's the same problem with the ASX 200. We don't know if we're going to get the A, the B and the C here, or because we're pushing up quite high here, it also opens up the door for a more confident move further up here. But if that's the case, then we'll pick it up at the 72. All right, thanks for tuning in. Cheers.